I'm sitting on set with you, Dan. Let's get things started with you. Well, the business had predicted a 33% gain in Azure going into this, despite the fact that street expectations had dropped and were lower than those at the time of the print. However, despite Meta's impressive report, is CapEx the reason driving that stock lower at the moment? Yes, I would describe this quarter as a huge success for Microsoft. I mean, there were concerns that Azure, based on what we observed in the cloud, might see some kind of slowness. Hyperscalers, it's clear from last night's impressive Google stats that this is only getting worse. It ultimately comes down to the AI revolution, and Nadella is atop that Mount Rushmore, not just Jensen. This, in my opinion, is just Microsoft showing off its enormous strength. The stock of Meta has experienced a significant surge. They're going to keep doubling down on capital expenditures. That's a wise decision, in my opinion. For example, I believe this stock may be up in 24 hours. Therefore, I believe that this is the incorrect response. We would purchase from Meta, particularly in light of what we observe on Microsoft. Yes, and I suppose that's the general idea I'm trying to convey. It appears that Microsoft had modest expectations going into this print, and Meta may have had slightly higher expectations. I'd like to know what you think about it, Rohit, especially in regards to Meta. Indeed, I believe that Meta had high expectations, and those expectations only grew. Even before that, Google reported, the top end of the Key 4 estimate, in my opinion, establishes the standard for what the 25% growth algorithm might entail. I believe that in order for investors to become extremely enthused, they needed a little bit more than that. Meta is the one to own on to its weakness. There is nothing at all wrong with it. However, I believe that the expectations are just not aligned with the direction the stock is taking and how it ran into earnings. Therefore, if there is continued weakening towards the end of the year, I believe we should be the ones purchasing Meta tomorrow. Back to Microsoft, Dan. It's only around 1% higher after all. It was a home run, you remarked. It isn't at its highest point of the year. What provides? Is this an indication that the stock may be running low, or are we simply awaiting the color and the guide to determine how optimistic investors should be? I believe it's waiting for Nadella to give it that color. However, I believe that this is actually a narrative about Azure growth acceleration. I believe that investors were worried about a slowdown of some kind. When you look at the margins and that intelligent cloud, you realize that this is a business that is thriving. In my opinion, we will be sitting here in 6 to 9 months with a $4 trillion market capitalization. Even though I believe Apple and Nvidia arrive first, the AI revolution is still in its early stages, based on what we have heard from Google, Microsoft, and Meta. Although the hyperscalers seem to be giving you more and more confidence, I believe Microsoft is a table pounder at this stage. I'm going to quickly turn left here and inquire about DoorDash. CFO Ravi Inukonda will be here shortly. You seem neutral to me about it. It guided higher than the street anticipated and beat on both the top and bottom lines. The stock has declined almost 5% over the past few days, and it is currently down about 1%. In addition to GAAP profitability, they claim to be growing market share and have a collaboration with Lyft that, I assume, aims to compete with Uber. What else are they supposed to do? Look, I believe they are in a good position because they have the best and most lucrative market, which is the core market. There is already competition for everything they do, whether it's grocery stores, restaurants abroad, or new growth sectors. As a result, the profitability of these new growth areas will be structurally lower. That is our concern with DoorDash. Although it is a market leader in restaurants in the United States, its profitability will gradually decline in all other areas they deal with. The profitability of GAAP is crucial. It is most likely the only firm with a market value of $60 billion that posted a GAAP profit for the first quarter today. As a result, once more, I believe that valuation is a major worry for us. I also believe that the company's performance over the next 12 to 18 months will be in the mid-teens, and its long-term profitability will not be as high as that of a standalone mobility company like Uber. We are neutral because of this. All right, Dan and Carney, you just joined Nvidia. As I mentioned before, it appears implicit that experts are referring to Nvidia when they discuss the cost of catching up. The price that will be required to try to catch up, perhaps not to Nvidia, but at least to be more competitive. Yes, that is a difficult task. First of all, I would never undervalue Dr. Lisa Su because I think she is fantastic. Additionally, the revenue guide on the call was about 7.5 against 7.54, and they even stated that it was plus or minus 300. Therefore, it seems to me that sentiment was entering with the desire for a large number. Although the gameplay was obviously subpar, I do believe that Nvidia is cannibalizing itself by developing faster, larger GPUs like Blackwell as part of this catch-up deal. And when these massive cloud service providers move from training to inference, will they suddenly require all that computing power? I'm not really sure about this catch-up deal though, because will we still require all of these CPUs and GPUs by the time they catch up? Therefore, I believe the market has noticed this. For the year, it's up, what, 2%? While Nvidia is up, what, 16%? We're going to show you. Pardon me for interrupting you while you're finishing your point. Excuse me while we toss that up. But we're now attempting to put together the stock-by-stock look year-to-date on AMD against Nvidia. Yes, I did just say that AMD should be treated as a separate business. They engage in distinct activities. Although there is some overlap, Nvidia has a clear advantage over Blackwell and GPUs in terms of AI spending. That's just the way things are. Therefore, in my opinion, catch-up is not a mathematically sound strategy. There you have it. If it doesn't convey the story, I'm not sure what does. Jason Snipe. Since you own both Qualcomm and Nvidia, you tell me. I take it you don't own AMD. You don't need to tell that story because it's not particularly interesting. Scott, I don't necessarily think so. It goes without saying that the price action conveys a tale. And it was obviously a light guide, I believe. The quarter was a chaos. They were better at the top and all that, but the direction wasn't very good. Furthermore, I believe that after looking at ASML's earnings, which were also ugly, you saw what transpired with Taiwan Semi, whose stock I know is Weiss's, and that it was a blowout. It just serves to highlight the fact that a select few businesses are succeeding in this market. The Beltway and the interstate travel all the way through Nvidia, as we usually say. I believe that's why so many people possess it. Let's call it what it is, Weiss, will we? You had a stock that was 80 times trailing P/E at the beginning of the quarter, which is nearly a third, higher than Nvidia. Their rates of growth are different. Even now, they are more costly than Nvidia, and that price will only go up next year. What were people thinking then? This trade is solely based on momentum. No matter how excellent Lisa Su is as a CEO, I have no reason to think she isn't. She is someone I admire and respect. She is not to blame for this. It might be her fault that she caught the GPU wave a bit too late. CPUs are still crucial though. The point is that, given that Nvidia is currently selling at a lower valuation, it was ridiculous to possess this stock at that price. I own Nvidia, so I know they're both overpriced, but I'm not sure what folks were thinking. We'll discuss a healthcare organization that might be in a similar situation. It still doesn't make sense. Prior to moving on to Meta, let me ask you a question. You mentioned the recipients of the expenditure, so tell me about AMT. That stock is yours. That stock isn't doing well today. I think it's reasonable to say that it's striving to catch up. What do you think someone who truly owns this stock should think? Indeed, the internal discussion is that AMD is performing really well. If you weren't watching the numbers from Nvidia and other companies, it's developing well. Growth is picking up speed again. Their goals for their AI data center company were raised.